Hi, I want to give you a year-end tax strategy for 2024 that you can implement right now and save on your taxes. Would you like to hear that? Okay, so this is a year-end tax strategy, and I want to give it to you now because you still have time to implement this. So if you are a S corp and you're not using this S corp to the fullness, I want to give you this little tax strategy. And let me explain why it's a tax strategy first. If you are grossing, or not grossing, but netting at least $50,000 a year, your company needs to be an S corp. A S corp gives you tax advantages that an LLC can't give you. A LLC does not help you save on taxes. It gives you protection. But an S corp lets you take tax advantages to help you save on your taxes. And today I want to give you the biggest tax strategy that is known for using the S corp. Okay, a LLC can't do this, or at least they're not supposed to. There are those out there that are trying to do it, but if you ever get audited, the IRS is going to take away this deduction. But as a S corp, there's a reason we ask our clients to make the S election, because the S election tells the IRS, I don't want all my income taxed the same way. As a LLC, whatever your profits are, you got to pay self-employment taxes on that, which is 15.4%. Let's say hold everything constant. If you made at least $50,000, or you think you're going to make $50,000 this coming year, 15.4% of that means you're going to owe about $7,700 in taxes. Okay, that's a LLC. Whatever that bottom line is, you're going to pay ordinary taxes on it. Okay, so you pull together your profit and loss statement, which says here's all the income that I made, here's my deductions that are allowed, and this is what is left. Okay, so on top of that, you're going to pay 15.4% of FICA taxes, which is your self-employment taxes, on your gross in an LLC. Okay, now let's look at an S corp. You can still make that same $50,000 that you would have made in the profit in the LLC, except now we're going to tell the IRS we don't want all that $50,000 tax as ordinary income. I'm going to split that, and the IRS allows you to take a reasonable compensation from an S corp. And so you can set yourself up on payroll in your S corp. Let's say you took half of that $50,000 that you was going to have left over in the LLC and took $25,000 of that as your salary. Okay, so part of that $25,000 is deductible as wages for the company, which you didn't have as an LLC. Okay, and then on payroll, we're going to withhold 7.65 out of that 25,000 as the taxes that you're going to pay in to the IRS. Okay, but now you get a second deduction because the company has to match that 7.65, and you get that deduction too. So not only do you get the $25,000 as a deduction, you get the 7.65 as a deduction, which decreases your bottom line. You follow me? So the company gets two deductions that it would not have gotten as an LLC. Okay, so then your bottom line now, because you took 25,000 of that as payroll, you've got that deduction, and you've got the 7.65 deduction. So now your bottom line, instead of it being $25,000 that left to pay the 15.4% on, it's like $23,000 that you're paying the 15.6% on, which would make your taxes come out to about $3,500. Okay, so 7,700 versus 35 plus your 7.5, which will be probably another $2,000. So you're going to pay about $5,000 in taxes under the S corp, where under the LLC you're going to pay about $7,700. There's a tax savings. You're going to save almost $2,000 just by using the S corp, and this is just on $50,000. Now, if you're making more than that in profit, of course, your savings is much, much, much bigger. But this is the number one reason. This is the biggest reason for making the S election, because you telling the IRS, I want to split the way you're taxing my bottom line or my profit, whereas the LLC, you get taxed as ordinary income and you don't have a say in that one. Okay, so this is one of the biggest reasons, if you're LLC, to elect to be an S corp if you know you're going to have profits. Now, you don't need to be an S corp if you're not making any money. But if you're making $50,000 or more, you need to make that S election, and let's start putting some tax strategies in place to help you save taxes year after year after year. If you just have someone that prepares your taxes, they're not going to go through these strategies to try to find out how you can save taxes. For number one, they can't do anything in April 15. The year is already closed. You can't put any tax strategies in place after the end of the year. You need to do this during the year. So you need more than just a tax preparer. You need a tax planner, or AKA a tax strategist. And this is what I do. I do tax strategy for my clients to help them save on taxes, and then take that savings and reinvest it so it makes more money, and so that you can start creating generational wealth. That's the end goal. Let's make some generational wealth, some wealth that's just not going to end. Okay, but it takes tax planning to make that happen. And you can start little, but as you graduate into implementing more and more tax strategy, then you become like the 1% or the 2% who is paying very little in taxes, because our tax code favors small business owners. We just got to use the tax code to not pay so much in taxes every year. So if you're just using a tax preparer, you're probably paying too much in taxes. You need a tax planner to help you save on those taxes, and that takes planning. Again, I'm Lovey Grant, a perfect balanced tactician. Let's make magic in your business.